So good afternoon, everyone. My name's Nicole Aliev, and I'm with Caris Realty. And my guest today is Brian Foss, who is the branch manager of First Home Mortgage in Frederick. And I thought, during these crazy times, it would be really useful to have a conversation about what is going on in the mortgage market, what is needed, what people can expect, what changes might be coming, what difficulties people are facing. So, welcome, Brian. If you want to say a few words about yourself, go ahead.
Yeah. Hi, Nicole. Thank you for inviting me today. Looking forward to sharing some information on current market conditions and mortgages in specific. So I've been in the business for over 30 years of mortgage origination. Myself, my wife, my daughter are Frederick County residents. I've been here for about 8 years after being in Shepherdstown, West Virginia for about 15. Started in the business in Annapolis, Maryland, and have made that transition to 2 different localities over the course of that 30-year period. I've been with First Home Mortgage for a little over 5 years now. And one of the things that I really enjoy about the company is its total commitment to putting the client first in everything that we do throughout our entire process, from the beginning all the way through closing. To talk a little bit about First Home Mortgage and how we are structured, if you think about maybe how a bank operates and how a mortgage broker operate, we're kind of a hybrid of those two business structures. We have the advantage of having multiple investors that we work with to place loans. So we have a lot of flexibility at our disposal to match up with specific customer needs. That would kind of fall more, I think, in the broker world. And we fund loans ourselves in our name, and we retain servicing on some loans, which would place us in the category of bankers, mortgage bankers. So we like to think of ourselves as a hybrid of the two.
Brian, say more when you say you fund loans yourself. What does that mean?
Yeah, so First Home Mortgage has lines of credit through banks that we use to fund loans. And those loans are closed in the First Home Mortgage name. We retain the servicing on some of those loans that we close, and others we sell off and transfer that servicing to other entities.
Super. So, certainly from my perspective, I've worked with Brian now for over 2 years in the mortgage industry. And from my perspective as a realtor, some of the things that I really like about working with somebody locally who is a local mortgage lender is that I can literally contact Brian any time of day or night. Not that I necessarily want to or that he wants me to, but a lot of our business as realtors is transacted over the weekend. And for some of the 9 to 5 institutions, it's very difficult to get hold of somebody when you're wanting to write an offer, and you need to speak to the mortgage lender to really get a real sense of how much the client of yours can afford in a situation. So, that's something from my perspective as a realtor that I really appreciate. Brian, I don't know whether you can say a little bit more about also some of the differentiators about yourself and First Home Mortgage and what you really think makes you so special in the Frederick market.
Yeah, I think we have the array of products and programs that I mentioned earlier. Some specific program types that we're very proud to offer to clients are first-time homebuyer programs. As a company, we are a platinum lender under the Maryland Mortgage Program. And as a company, we have originated more Maryland Mortgage Program loans than other lenders throughout the state. Within that Maryland Mortgage Program, there's some specialty programs that can appeal to specific types of buyers. For instance, a buyer who's got quite a bit of student loan debt. There are some programs now that the state makes available through us to help that customer pay off their student loan debt and have that student loan debt that's been paid off be forgiven So it's a great program that we offer among many other program types. Renovation financing, if you're buying a home that's distressed, that needs some cosmetic improvements or major structural changes to make the house more suitable to your needs. The renovation loan's a great product for some individuals. We can finance investors who are looking to build a real estate portfolio, move-up buyers, as I mentioned, first-time home buyers. The programs that are offered are, kind of the four basic program types under conventional FHA, VA, and USDA financing. And I like to think we do a pretty good job.
Well, my experience certainly has been that, and I firsthand had clients work with you who have taken advantage of that Maryland mortgage program where they could pay off student debt, and I think for a lot of buyers that's a huge thing that's preventing them from going into the market, and they don't really realize where that can actually help them.
Yeah, that's exactly right.
Super. So, Brian, if I was thinking of buying a house, what kind of information do you need from me?
Yeah, so the first step to purchasing a home and getting an idea of what kind of a sale price you might be eligible for and qualify for is to complete a pre-qualification application. With most lenders, that can be done by phone, through websites that the companies maintain, or in-person meetings. Part of that process includes obtaining information about a borrower's employment to cover a 2-year period where they've lived for the last couple of years. We do pull a credit report based on the information that's provided. And then we also request documentation to help us validate that pre-qualification or pre-approval. So we'll, for most loan programs, obtain 2 years of tax returns, W-2 statements, recent pay stubs, bank statements to cover a 2-month period. And then if there are any other specific issues within the loan, we address those and document those as applicable.
So you've used 2 terms there, pre-qualification and pre-approval. Do you see much difference between them?
There is, yeah. Pre-qualification is probably the first stage in the process, and that may be where we perhaps have just pulled credit and haven't documented income or assets, and we're providing the customer with a general idea what they would qualify for. Once we receive their documentation and we have validated the income that we're using in the pre-qualification process, that converts over to a pre-approval. And for agents such as yourself, that pre-approval is needed if you're going to go out and show that prospective buyer properties. And it's certainly needed by the time you write a sales contract. You want to be able to show a seller that your buyer has been pre-approved for that mortgage.
Absolutely. And, just to talk from the real estate side, for me, I mean, I might start working with somebody who's got a pre-qualification. Sometimes, you might get somebody who comes through with something from Rocket Mortgage and so on. I prefer to actually keep working with my local lenders to make sure that we have that relationship, because I know that they're doing a really solid job of checking what is there. Because number one, when I'm taking a prospective buyer to go and see somebody's home, I know that the seller has typically spent a fair amount of time preparing that home before the home even went on the market. But if they're still living in the home, every time they get a request for somebody to come through and see their house, they're having to tidy up, put their dogs away, their cats away, deal with the children, make sure that everything is good. So I don't want to be wasting anyone's time by taking a buyer who is not qualified or approved to be able to go and see their home. Because also, up until recently, the market was such that there was so little inventory that if we saw something that somebody liked, we needed to get in there really quickly and know exactly how much we were able to offer to the seller so that, it was realistic, and having that pre-approval really helps.
Yeah, I think it's a benefit for all parties involved, for sure. We don't want to raise the expectations of the buyer to think that they may be eligible for a higher price range when, in fact, based on documentation that's provided, they may not qualify for quite the amount that they were shooting for. or at least they have a good firm understanding where what kind of a price range they should be shopping in.
Absolutely. And I always say to my clients, you're not living to pay the mortgage. You shouldn't be living to pay the mortgage. You should be living to enjoy the space that you're about to purchase. So we need to be realistic about it.
Right. Yeah.
So tell me a little bit about what's going on in the market and with fluctuating rates, because as the Federal Reserve has been dropping its interest rates, this has had quite an impact on you, hasn't it?
It has. Yeah. In my decades in the business, and I've continued to do business through 9/11, through the financial crash of 2007 and 08. I think this is right up there near the top of an event that's been probably the most destructive or disruptive, I should say, of our business. The uncertainty out there amongst our borrowers, uncertain about their, what their job situation is, whether they're going to have the ability to make mortgage payments, second guessing their purchase, perhaps. We didn't see that quite to this level back in previous years. But I think, that this will be a temporary blip, I think, in our markets. Eventually, I think the confidence level will recover. And I think folks will be able to move about freely and continue to, buy homes and get on with their daily lives. Looking forward to that day.
So am I.
But yeah, I mean, as far as the direct impact on our business, we're open as a mortgage company. Banks and non-bank lenders are on that quote unquote essential sectors list of companies that can continue to operate and provide staffing in their offices.
As are title companies and real estate agents.
Title companies, that's correct. Yeah, exactly. And most of the support services are also able to do businesses. I know our appraisers are still doing their inspections. They're taking every precaution when they visit a home and being as accommodating as possible to the sellers. I'd say most folks are really working together, to accommodate our staff appraisers.
Super. So Brian, back to the rates. I'm going to dive in a little deeper on that. Why do mortgage rates fluctuate? And is it always dictated by what happens at the Fed?
There is a relationship, but it's not direct. The easiest way to put it probably is that the Fed controls short-term rates. So when the Fed adjusts their rates either up or down, you hear about the discount rate, which now is targeted at 0 to 0.25%. Those are short-term rates. Those are rates that member banks will charge to one another, and for short-term loans. Those discount rates affect consumer financing, such as vehicle loans, credit card rates, home equity lines of credit, those types of products. With mortgages, we're affected by bond trading, specifically mortgage-backed security trading on the secondary market. If there is a heavy appetite for that type of investment, the demand increases for purchasing mortgage-backed securities, and that tends to push yields down or push rates down when that demand is there for the mortgage-backed security. At this moment, there's not a lot of appetite for mortgage-backed securities other than the Fed. The Fed has committed to purchasing now an unlimited amount of mortgage-backed securities, and that has stabilized our market. But the lenders and the investors who will be still purchasing these mortgage-backed securities are concerned about where the economy will be in the short term and long term. The impact of potential layoffs and unemployment numbers increasing, that translates to higher default rates on mortgages. So that reduces the appeal of mortgage-backed securities as an investment. The interest rates increase to make that investment vehicle a little more attractive to investors.
And now, can that cause a fluctuation during the space of a day? So if I call you up in the morning and you give me a certain rate, and I say, okay, I'm going to call you back in 5 hours, and once I've thought about it, could it affect it?
It absolutely can. Yeah. So with practically any lender, when you receive a rate quote these days, it's really not locked in until that lender obtains confirmation from their lock desk that it is locked, because things are so fluid in our environment right now, where rates are changing several times throughout a day. Even this morning was a good example. Rates were improving this morning, and by noontime, rates had turned around and were on track to worsen over the course of the day. And that may have changed just in the last 10 minutes since we've been talking.
Gosh, okay. So can you give me a vague idea as to where we are at the moment, say on a conventional loan, conventional 30-year loan?
Yeah, so rates are still great. They're in the threes, in some cases the lower fours. There are typically some points involved with most rates right now, but I would say the rates are still very attractive. They hit a low point probably 2 to 3 weeks ago, but they're still better than they were 2 months ago or 3 months ago.
Okay, that's super. So if I was to think of refinancing now, what are some of the considerations? Like what level would make it worthwhile for me to consider, okay, it's worth paying the closing costs and the reappraisal costs, etc., for me to refinance?
Yeah, so a general rule of thumb that we share with our customers is a 3-year break-even period. So, we calculate that break-even period by taking the cost of refinancing, and that would be the closing cost, perhaps any points that are paid, or if there's an upfront mortgage insurance premium, and then we divide that total cost by the monthly savings. Generally, if that recovery period, break-even period, is within 3 years, it will generally make sense, but every situation is a little bit different, and it will depend on what the customer is looking to get out of refinancing. They may be shortening their term from a 30-year to a 15-year fixed rate. That recovery period doesn't apply because it's not, there's not a monthly savings amount that you're going to use to compare to the monthly cost. In those cases, we're going to look at more long-term interest over a 15-year period that they're going to pay versus the interest they have remaining on their existing loan. And we do those calculations so they can look out, okay, on a 15-year loan versus continuing to pay the mortgage on the 20 years that they have on their current mortgage. Maybe they save $40,000 in interest charges over a 15-year period. So we counsel our borrowers to help them make a good, educated decision on what the best decision
route would be.
Yep.
And that's really because the first few years you're paying off primarily interest, right? Versus
that's right.
Yeah.
Yeah, that's exactly right.
So just to touch on some of the kind of more nerve-wracking side of the sector in mortgages for current borrowers who are anticipating that they may have problems paying their mortgage, what kind of relief may be available to them? Is there anything being discussed at the moment in the industry, and how could they apply for it?
Yeah, it's going to be a difficult situation for a lot of borrowers. Right now, my recommendation is to contact your loan servicer, the 800 number, the customer service folks, and just at least alert them if you're foreseeing some issues down the road in making your payment. It's always best to communicate with your lender who's servicing your loan, to just let them know, give them a heads up that you may have some trouble meeting those payment requirements in the near future. Keep that communication line open with that servicer. There may be some help on the way. I know the industry is working on some accommodations for borrowers who are struggling making payments due to job loss. So we'll be hearing more about that, I'm sure, in the future.
Well, hopefully we won't get to as bad a situation as we were in 2006 through 2009, really.
Right.
So Brian, thank you so much. This was really informative. And if anyone has any questions for Brian, his direct number is 240-474-5407. And if anyone would like to speak with me, my telephone number is 301-305-5169. Again, I've been speaking with Brian Foss, who's the branch manager for First Home Mortgage in Frederick. And I'm Nicole Aliev with Karis Realty. Stay safe, everyone, and let us know if you have any questions. Thank you.
Thank you for having me, Nicole.